Hey everyone, how are you doing? This is Danielle. Happy Friday. Today, I'm going to be talking about how the markets can change during earnings season and specifically how the market has changed this quarter over this earnings season and what we can look forward to over the course of the next few weeks. So, just starting out, I'm going to go over the NASDAQ. Looking at the NASDAQ here, we have just seen the NASDAQ make a new all time high, which is very glorious, if you ask me. A lot of the volatility that we saw this quarter surrounded earnings season. So, typically for me as a trader, number one, I love trading earnings season, but I also love swing trading before earnings season. So, typically about 3 or 4 weeks before earnings season starts, I generally like to look for swing trades going into earnings season. That's generally going to cover stocks, for example, where people are really excited. They're buying shares in the company before that earnings report. And so what happens is it causes the stock price to go up, and you can generally ride that wave going into that report. You also have the opposite situation where you're going to have tickers that people are not excited about that earnings report. Investors are selling off shares before it. And then what you end up getting is you end up getting a nice swing short before that report. So I like to do those kind of trades. But then as we get into earnings season, I like to do a lot of overnight earnings trades. So I have covered a lot of those on my YouTube channel. If you want to check that out, it's just called at Trader Danielle. But basically, I've been making videos on here explaining the overnight earnings trades that I do a lot of the time. Sometimes I'll do directional trades, sometimes I'll do neutral trades. But if you check that out, you can find a lot of different examples that you can utilize throughout the season. So at this point in the season, we're at the spot where most of the important earnings reports have kind of wrapped up, and we're looking at what the result was this quarter. In this case, what we had was a lot of volatility starting out the quarter. We had a couple different moments of disappointment. If you start off and you just look at some of these mega cap names, for example, Microsoft is definitely going to be one of the most important tickers that I'm always going to look uh, at the beginning of the quarter. It's generally going to be a ticker that you can trade quarter over quarter. The majority of the time, Microsoft is going to trade higher going into earnings. What you'll see this quarter was that was not the case. We ended up seeing Microsoft pull back and trade lower going into this earnings report. And even after it initially gapped up over earnings, it ended up rolling over. So we started off the season with a pretty negative tone with these mega cap tech names. Microsoft did eventually recover, and it's now up above the 50 simple, which just speaks to the strength of the overall stock. This is the number one stock in my stock portfolio right now. So, well, the reason why is because even when it does trade lower, it recovers really well, right? So I always love Microsoft. And now that Microsoft's up above the 50, looks like we're going to head back to that previous all-time high and then up to my target at 440. But just to cover some of these others, this quarter over earnings season, basically what we're seeing here is that we had a couple of these critical names at the beginning of the season gap down and just have these destructive moves. Now, whenever that happens, that's absolutely going to impact the NASDAQ in a negative way. We saw the NASDAQ trading lower. It looked like the NASDAQ had a potential to break quite a bit lower, but what ended up happening was it was saved by Apple. Nobody would have guessed, right? So if you look at Meta, Meta had this major gap down 14%, but I'll point out what happened afterwards. Now, a lot of the times when you have these big gaps lower, you're going to see a stock continue to roll over and die. Now, in this case, we had buyers coming in. We continued to see this stock recovering. I thought you could probably trade it up into 500. We didn't quite get there. We got up to 482, so not all the way up to the 50 simple, but it is still recovering. It is still in a nice, somewhat decent uptrend, shorter term uptrend anyway. And with this stock, if you can get up above the 50 simple, the main line in the sand here, that's the point where it can really start recovering. So a lot of my trades post earnings are going to depend on if the buyers come in, at what levels, and where the breakout zones are. So in this example, number one, you had this low that held, okay? So this provided an opportunity to come in and buy Meta, especially on a breakout of these lows. At this point, that trade is pretty much done unless and until it can break the 50 simple. These 50 simple breaks can be some really good post earnings trades. If we go back and we look at Microsoft, for example, whenever you see that stock break up above the 50 simple, that's generally going to be the spot where you're going to have some high volume coming in. You're going to see a major shift in trend. In Microsoft's case, it kind of flirted with the level for a few days, but then after it was able to bounce and hold, that's really where it started to take off. So, for some post earnings trades, especially on stocks that were kind of weak like this, generally what I'm going to look for is going to be the hold of the lows. I want to see a shift in pattern, a pattern of higher highs and higher lows. And then ultimately, I want to see a breakout up above a resistance zone, especially a critical resistance zone like the 50 simple. Now, if you go back and if you look at Netflix, this was also another critical report. This one started off the season. And so, whenever you look at the stocks that are starting off the season, they're going to have a major impact on the overall market. And in Netflix's case, Netflix had, like Meta, a big gap down. We had a 7% gap down. But, what wasn't as bad about this gap, it wasn't as bad as it could have been because it held this critical support zone, which is the 100 simple. Yes, it did, break through a few times, but by and large, it did hold the critical support zone. This was also a previous gap level right here. So that's also why that level was pretty critical. But what was great about this was it provided a trading opportunity when you could see the pattern starting to shift. This breakout right here, higher highs, higher lows, you start seeing the candles breaking through the overhead areas of resistance. And this right here, this break above the 50 simple, that was really where things changed. If you're trading higher and you're recovering, but you're below critical resistance zones, it's one of those things where, yes, you can trade it, obviously, but it's not really a trend shift. So, what I'm looking for with these post earnings moves and to determine if it's just a short term buy the dip earnings trade or if it's a major trend shift and we're now going back to new highs is going to be the difference between is it above or below those critical support zones. And in all of these charts, well, I guess Meta hasn't made it up above there quite yet. Most of these others have. That is what made all of the difference. So right here, this break above the 50 simple, that was also at a key psychological value at the $600 price point. And then that's also where you can see the candles have shifted from red to yellow to green to bright green. And at that point, I mean, you're in a nice bullish uptrend, and now you're heading for new all-time highs. So that's where that changed. And what was so critical about this earnings season in particular is that even though these companies traded lower after earnings, they recovered. We had dip buyers coming in that showed a lot of positive excitement. And it showed that, investors are looking at these reports and saying, hey, I know that they're down after earnings, but guess what? It's not that bad. So let's come in and buy the dip. And that ultimately was what changed for the NASDAQ on this longer term chart. So, after going over a few of those mega cap names, let me just demonstrate to you the exact same thing that happened with the NASDAQ, right? So, we were pretty weak after seeing a lot of these mega cap tech names. There's a lot of nervousness. But then what happened was the NASDAQ started to squeeze. Anytime you have a squeeze, that's going to tell you that there's some energy building up and you have that potential for breakout. Now, which direction is it going to be? It depends if it's going to be below resistance and it fails, or if it breaks out above that resistance zone. Again, back to the 50 simple. So, with the NASDAQ, I mean, the main thing that I was looking for was okay, are we going to be able to get up above this zone? Yes or no? This right here was right around Apple earnings. So what was interesting is that, I was bearish Apple earnings. I think a lot of people were, mainly because they haven't really been doing very well the last couple quarters after earnings. They gapped down. They've been in a bearish trajectory. The stock was down pretty close to the lows on the year. And so they really needed to pull out all the stops for this earnings report. What they ended up doing was they did just that. They announced an increase in their dividend, they announced stock buybacks. Those are two, double whammies that are definitely going to make investors feel a lot more confident about the share price going forward. So, when you're looking at this and you're looking at the way that Apple reacted to earnings, what was so special about this move was that it was more than the expected move. So, whenever you're looking at a move over an earnings report, you want to look at the implied move in the options market. This was about 1.5 times what the priced in move was. And for that reason, that's why it was a big move. It was also a big move because it gapped up above the 50 simple, as we've discussed a few times, and it also gapped up above the 200 simple and the 100 simple. Up above those zones, that's where the trend changes. That's where I say, okay, I was wrong on my bearish thesis. Because if it would gap up into here, you could still short it again because that would be a resistance zone. But once it was up above 180, that's where the trend has shifted, things have changed. I did lose money on my bearish Apple trade over earnings, but the great thing about that was this was really the catalyst to send the Nasdaq to the new all-time high. So ultimately, who's complaining about that? So if you look at Apple here and the way that this impacted earnings, you can see that this gapped up here, pulled back, hit this support zone, and boom, off it went. So that's right around the same time that we saw the NASDAQ just continuing to break out. So let's see, this was on the second. So that would have been the third, basically. So that was this candle right here, this nice big yellow candle. So that was ultimately what changed this trend in the NASDAQ. And that is why earnings are absolutely critical. So if we're looking at earnings going forward and saying, okay, we know that we came into earnings season with a little bit of nervousness. We saw some of these mega cap names that were selling off. But in good news, buyers were coming in after the fact. Then we ended up having a very nice surprise from Apple, helped the NASDAQ out a lot. Well, where do we go from here? Well, let me tell you that the major area in focus right now is going to be the semiconductors because we still have one very important report next week, which is going to be Nvidia. So, if you look at the semiconductors, very similar pattern. I mean, again, my line in the sand was right here about 220. So I, I love the semiconductors in my stock portfolio. Definitely in my top 5 weightings. So super important, just as far as long-term holds and investments, but also absolutely critical to help determine the direction in the NASDAQ. So, the NASDAQ really does need the semiconductors to be strong in order to continue higher. and, just remain strong. So when you're looking at this, the semiconductors were able to break out above that 50 simple again, right after Apple earnings. And so we've remained in a positive trajectory here. The question of can we make a new high soon? I mean, I think we can. We're pretty close to that target anyways. That previous high was 239. Your next target is going to be 240 and then up at 250. So, you know, I don't have any specific technical setup on this other than the fact that I just have some Fibonacci levels up there, and I have a trend reversal and a breakup above the 50 simple. But the main thing that I have on my radar is Nvidia earnings. So Nvidia is going to be reporting earnings next week. If we go ahead and pull up Nvidia here just to see what is going on, you'll also notice that, you've got that break up above that critical resistance zone. You can see that I have a bunch of different Fibonacci levels on here. This most recent setup has already met targets. I had a recent setup on Nvidia for a bullish run into earnings. That target of mine was at 950. I know it looks kind of sloppy with all these levels, but essentially what you're looking for is you're looking for just a confluence of levels, and you're also looking for shorter term levels, which are right here, and then longer term levels, which are up here. So if I go ahead and erase all of this so you can clearly see what's going on, there you just have the price. Basically, what I do to determine those longer term price levels is I'm just going to basically throw some Fibonacci values on there, and I'm going to try to overlap those with some key psychological values. And then I'm also going to overlap those with some options data. So just starting off with a weekly chart, if you project your previous high to your most recent low, what that is going to give you is it's going to give you a price target. It's going to give you some resistance zones here, here, here. We've already traded through those values, so we can go ahead and erase those. There, there, and there. But after that, um, you can see that you have a 1272 extension, which is going to be the first price target. That's going to be at 1050. Then after that, you have your 1618 extension, and that target's going to be basically up at 1100. So if you look at those two price targets and you say, okay, makes sense, it's a little bit, let's see, what, $100 higher, $120 higher. Then the next one, let's say $150, $170 higher. So when could that ticker actually be there? Well, that's where you want to go into the options chain, and you want to look at your implied volatility and the expected move. So because Nvidia has earnings next week, there is going to be a pretty high expected move. It has a $90 expected move just for next week. Now, if you go out another week, you can see that the move is $101. It's not that much more than the week before, just because this is going to be the big week where you see a lot of movement. So if we look at this and we say, okay, when is it reasonable that this stock could actually be up at 1050? Well, let's look at our options chain for next week. See if there's anything standing out here. Whoops. So what I'm looking for is high open interest. Stocks that are heavily traded in the options market are going to have a lot of high open interest around their so-called sticky points. These are the points that I'm always going to place options trades around. And the reason for that is because they just act as a magnet. So when I'm coming into an earnings report and I'm making a determination, am I going to be bullish? Am I going to be bearish? Am I going to place a neutral trade? I'm always going to look at my Fibonacci targets, my expected move values, and then I'm going to look at my open interest in the options chain to see how I can align those factors to see how I can place a trade in the options market. So when I'm looking at this, A few things that I will notice. We have volume and open interest here. That 1050 target that I had pointed out, as you can see, there's a ton of volume and open interest in that strike. So what that means is that is an incredible sticky point for me to use in an options trade. Is the stock going to go exactly there? I don't know if it's going to go exactly there, but I know that I have a pretty decent shot of placing a trade there. So that's probably the target I'm going to use. Why is this volume and open interest sticking out? Well, you typically want to look for at least 3 times the volume and open interest in that series as the surrounding series. So, for example, the open interest in this strike is 3,500. But the strike just below it, it's 400, 800, 450, 867. So certainly that one qualifies as a target and a sticky point. The volume here, 1959 definitely qualifies as more than 3 times. Now, you'll also point out and say, well, Danielle, what about these other ones? You have, 1100. This one's sticking out too. At 1100, this one has even higher open interest. So with this target right here, yeah, that looks even better, right? But what I'll tell you is that you have to look at your expected move. So you see right now, you're trading at $932 a share. Now, obviously, we don't know right now where it's going to be trading on Thursday before it reports earnings. At that point, it could already be trading at 1,000, and that could be within the expected range. So you have to take into mind that I'm making this video several days before the earnings report, and things will change by then, right? So that's why we always go over these the day of earnings. But as of right now, this one is going to be pretty far out of the range. But if you look at Nvidia and see the way that the stock can potentially move over earnings, last quarter it had an 11% move. So that's why I would consider the 1100 price target to be a little bit more of a lotto target. It's not completely out of the realm of possibility, but it is outside of the expected move range. The stock could get there because it has had some pretty big moves over earnings, and especially recently. But I wouldn't, bet the farm on it either, because it is going to be a much lower probability price target. So if I was going to set up some trades, and again, I just want to make sure you understand that I'm not placing any of these trades right now, because they would need to be placed on Thursday, the day of earnings, for an overnight earnings trade and taken off the next day. And I have no idea where the price is going to be then. So not valid right now, but just as an example, the way that I would do it is I would say, okay, if I'm going to use this 1100 price target as a sticky point, how can I set up a trade to where, if it ends up going there, I can make some good money. I'm not going to risk a ton of money because it's a lotto trade. How can I do that? Well, I just start off with 1100 as the center strike, and then I just start widening the wings to just see what kind of trade I can get on. Now, with any trade, you have to think about your acceptable risk parameters. Everybody's risk is going to be different. For me, I generally risk like 1% of my account per earnings trade, and then I'll do maybe 3, maybe 4 overnight. And so I know that seems really low, but that's just how I do things, because I'm not a wild, crazy trader like I used to be. I used to risk, probably 10% of my account per trade, but I just don't do that anymore. So I like to, have a little bit more calm in my life. So looking at something like this, you could set up a $50 wide butterfly for only $2.75. That's actually really, really good, because when you are setting up a butterfly, you are paying a debit. Okay. So you're paying $2.75 per contract. So for one contract, that's going to be $275. It's pretty low, right? For a $50 wide butterfly, the maximum you could ever sell that butterfly for would be $50. So let's say that you're 100% right. You buy the butterfly, Nvidia gaps up, trades up into $1,100 the next day. In a very perfect world, you can close it for $50. People always criticize butterflies and they say, well, you're never going to get that rare thing, blah, blah, blah. Yeah, it would be, somewhat rare to get the price target, but it's not that rare. I do it like pretty frequently. But I also don't try to get the max profit. I'm just trying to get it within the range. I'm not trying to be greedy. You can watch the videos on my YouTube channel, like I said. I'm just trying to get the stock up into that range. So, for example, if the stock trades, even if it trades at 1060, you could have a triple on this. So, that, for me, if I got a triple, I understand that the max is $50, but a triple would be great. And that's a really cheap way to get involved. So, for me, that would be a win up at 1060. And if it just so happened to trade up into 1080, I mean, that's where you can really start making some good money. So that's why I like to do these butterflies over earnings. Obviously you have to talk about what happens if you lose. What happens if you lose is you lose your debit. So you can never lose more than the original debit that you paid. So that would be $275 of risk on that trade. Now, because that one is going to be out of the money, it's a little bit more of a lotto trade. What you can do is say, you know what, I don't really want as much of a lotto trade. I want something that's going to be more realistic. So, what can I do in that instance? Well, in that case, you would just slide your butterfly down and you would say, okay, what if we do 1,000 as the first target? Then we do 1050 and then we do 1,100. Okay. So, in that case, you would be using the first sticky point target at 1,000, and then you'd be using your second sticky point target at 1050. And this third leg is just for protection, because what you're really trying to do is you're just trying to buy the $1,000 call and you're trying to bring down your cost by selling the 1050s. And that gives you a much lower debit, because if you look at what the cost of a $1,000 call would be, it's going to be about $2,000. I personally don't want to. I pretty much never buy long calls on an earnings report. I know that newer options traders do that, but there's really no reason to do that, because you can bring down your cost basis substantially by getting into a spread. So why spend more money than you need to, right? It's like, why not go to Costco? Uh, why go to a grocery store? It's going to cost you twice as much when you can go to Costco. There's no reason to. I don't think so anyway. So in this example, let's say you're super bullish Nvidia. You think it's going to be up above 1,000. Don't buy a $20 call. You can buy a butterfly, bring your cost basis down. So in this example, again, you have a $50 wide butterfly. You're only paying $5. So you just need the stock price to be up above, about $5 up above 1,000. Is that reasonable? Could that actually happen? Well, you have an expected move of $90 and you're trading at 932. So, I mean, yes, it is. Obviously, again, look at the price before earnings. But so something like this, you'd be risking $5 overnight, max of $50 potential. But basically, you'd just be looking for Nvidia to trade up into that bullish zone. Now, people will also say, well, Danielle, what if Nvidia just rolls over and dies? The hype is so big. There's no way it's going to go higher. You're crazy. This thing is just going to crash lower. What can I do? Well, in that case, if that's your analysis, you can do the same thing, but you can place a bearish butterfly. So instead of placing it up here at these upside targets, you would want to place it at a downside target. So, what kind of target could you use? Well, again, you have about a $100 expected move. Um, if Nvidia disappoints, it could move more than $100, right? And that would be the idea. You would be saying, okay, well, I think it disappoints. I think it's going to move more than expected. Where could it go to? Well, in that instance, I'm always going to look for some critical support zones. We have support down at 800. That's where we have previous price support. It's also pretty close to this previous gap level right here. If you look at some of those other mega cap tech names that we talked about, they kind of fell down into their previous gap levels and also where you had some critical price support. In this case, you do have support a little bit lower than 800 at 767, but you have some decent trade around 800. People will criticize me sometimes and they'll say, well, all you're doing is picking your price targets, at 800. You're just counting by 100. You're just counting by 5. And what they don't understand is that as an options trader, that's exactly what you want to do because you need to be identifying those key psychological values that everybody's looking at. And when you're trading with things like butterflies and like spreads, the best thing you can do is pick a target that everybody's looking at because they act as a magnet. So, if you're going to try to pick $767 in your options chain, it's going to be pretty hard for you to be able to identify that as an actual strike that the market could trade to. You're not going to have the liquidity that you need in the options market. With Nvidia, the liquidity is actually really good, so you don't really have that as an issue. But some of these other stocks like Chipotle, for example, you're never going to be able to find, a strike that's just a random number like that. So the reason why I always use these key psychological values is because they work, and because when you trade butterflies and spreads like me, it's a magnet. So looking at potential downside targets, 800, there you go. You've got that volume, you've got that open interest, you have 5,645 contracts right there compared to all of these. So substantially more, right? Now, a lot of times what I'll do, and I've gone over a lot of these examples on my YouTube channel, is I'll just say, you know what? I don't know if it's going to go up or down. The stock goes half the time up, half the time down. I don't know. So let me just place these butterflies on both sides. Obviously, when you do that, you're going to lose money on one side. So you have to be in a situation where your risk to reward is strong enough to where if you lose your debit on one side, if you get 3 or 4 times on the other side, you're still going to make money. So that's generally what I will do if I set it up both ways. In this example, with a $50 wide butterfly in Nvidia for a trader that would like a bearish take, you're paying $5.55 for a $50 wide fly that, could be worth 10, could be worth 20 if Nvidia does tank. So those are basically the different ways that I would set up this trade. I would personally not do a neutral trade on Nvidia because I don't think the probability of it staying within the expected zone is very high. Um, you can do that. I will do a lot of neutral earnings trades, but the kinds of tickers that I do neutral trades on are going to be something like Hershey's. It's not going to be something like Nvidia that has, 26% move this way, 11% move that way. It's just not really what I'm going to do. I'm going to look for something like Hershey's that generally moves less than 2%. And I'm going to come in and I'm going to sell the calls and the puts and buy the outer wings for protection. Something like this, it's, and that's exactly what I did on Hershey's because, like I said, half the time it's up, half the time it's down. I mean, I don't really care which way it goes. I just want to trade the volatility crush. In this example, you can see that there was this volatility crush there. And so for that reason, um, just come in and sell the premium, but I'm not going to be doing that on Nvidia. So if you're looking at all this and then you're saying, okay, so what is the point of all of this, Danielle? Well, the point of all of this is number one, you can trade earnings, but number two, you can use earnings to determine which direction the market's going to go. And then you can use that for your other swing trades. So if you notice that earnings season is causing a bearish tone, that means that you can look for some bearish swing trades. If you actually notice that earnings season is causing a major trend shift, like it did Apple after Apple earnings, that's where you can look for some breakouts to the upside. And you can say, hey, you know what? The trend is shifting. We're going back to new highs. Let's put some relative strength longs on here. Now, in this case, we're in a situation with the NASDAQ where the NASDAQ actually has a weekly squeeze. Whenever the NASDAQ has a weekly squeeze, that's like glorious because that's going to cause several weeks of price action in one direction or another. In this case, this is a bullish chart. We had this really nice pullback by the dip, high volume breakout. We have already made a new high, but there's still more upside potential here. I have a target at 19,143 in the NASDAQ futures. And then after that, look at this glorious price target up here, 20,000. So can we make it there? Well, it's going to depend on Nvidia earnings. Nvidia has the power to either throw a wet blanket on this rally or cause it to continue even higher. So, if you're trading next week, definitely have to pay attention to which direction this thing is going. As of right now, we've already seen a really nice move in Nvidia before earnings. Nvidia is a stock that's generally going to trade higher before an earnings report. It's pretty much already done that. Could it, keep going from here? I do think it could keep going from here, but at this point for me, it's a little bit too late to get into another trade. I've been talking about this move into 950 for a while, and once we got the breakout up above the 50 simple, it was off to the races. Um, this stock also generally has about a 10% move during the pre-earnings time frame, which started all the way back here. And at this point, you're pretty much at the end of the time frame. So I would not be personally coming in here at this late in the game trying to continue trading it higher before earnings. I would just wait until the earnings report at this point. But that's coming from a swing trader. Obviously, if you're a day trader, probably have a different perspective on that. But anyways, this is going to be the most important event next week. So if you want to trade that, I will be in the options gold room. I'll be there on Tuesday. I'll also be there on Wednesday. Usually in there on Tuesday at the close. And then on Wednesday, the hour before the close. So you can find me there. You can also drop a link if you don't have access to the, it's actually not the options gold room anymore. We call it the simpler central room now. But basically, you can join me in that room. All of our traders are going to be looking at Nvidia earnings, I'm sure, next week. So I'll go ahead and post a link if you want to join there. Other than that, I hope you have a great rest of your day. Let me see if there's any other questions I need to get to. You think I'm a great options trader? Oh, thank you. Yes. Excellent. Is it really an Nvidia butterfly? Oh, hey, Sean. What's up? You've never heard of any wild and crazy traders? Oh my gosh. Well, I used to be a lot more wild. Boeing is attempting a triple top breakout. Excellent. Excellent. Is D an AI play? Oh, I think that question was for Chris. I can look at Boeing real quick. Yeah, I definitely like to it's funny, Jane. I always take requests during the I always take requests during my sessions in the room for sure. Yeah. So, I mean, this is the exact pattern that we were just talking about, right? So the breakout up above the 50 simple. So We are seeing a little bit of a trend shift there. We definitely have that bullish gap up after the earnings report. You have the squeeze. So, these counter trend patterns aren't my favorite, but um, you know, a setup is a setup. And when you got a setup, you can trade the reversal. So I hope all of you guys have a great day. Okay, you want to go over D? I'll go over one more. Is it the ticker D? No. Couldn't have been that. Okay, from Mike, I see. All right. Well, if you guys have any more questions for me, you can definitely put them in the chat. I'm thinking about doing more of these sessions. I think I need maybe some topic examples. So if you have any topics, let me know. Um, and I'll consider doing some more sessions like this. Maybe I was thinking maybe I could do them on Tuesdays after the close. Maybe I could do them on Fridays. I don't know, but I'll think about it. I hope you have a great rest of your day.